Welcome to this month's Economic and Market Update. I'm Natalie Commoner, I'm a Portfolio Specialist at MLC, and I'm joined by Bob Cunneen, our Senior Economist. Welcome, Bob.
Thanks, Natalie.
Now, Bob, there's been a lot of media attention on the coronavirus. How have global share markets been reacting?
Well, for January itself, global share markets were weaker. They were down about 0.6%. And it's largely a case with China. It was down about 5% for January itself. And since January, the end of the month, we've had a bit of a roller coaster ride. The market's been down between 2 and 4%. But we've had a bit of a recovery since then. But the virus threat is still with us. So if we looked at the infection rate in China, more than 28,000 cases, and we've had more than 500 deaths. So we are dealing with a situation where we have a lot of unknowns, as in we don't have enough information to judge the risks with this virus. So we just have to be conscious of that, and we have to strap ourselves in because it might be a very difficult situation for quite a few months coming forward.
Sure. And how have fixed income markets been reacting?
Well, fixed income markets have rallied in the sense that bonds are now bid, so we're seeing lower yields. Investors are taking a pretty cautious line, so when share markets come under pressure in this situation, typically bond yields fall and they deliver stronger returns.
By the end of January, we saw the UK formally exit the European Union. Was there much of a reaction from share markets?
No, not really, because in the scheme of things, Brexit has been a 3-year soap opera, and we've had the new election of a government, the Conservative government under Boris Johnson in the middle of December, and we've had in the last 6 weeks the formal exit from Europe. Mm-hmm. But from January 31st till whenever it'll be the case, Britain has to negotiate with the European Union on the formal trade agreements. So we've still got a degree of uncertainty with Brexit.
Australian share markets, how have they been faring during January?
Well, we've had an exceptional run, up 5% for the ASX 300, and we've had a few stocks that have been extraordinary. So if you looked at Woolworths, was up about 16%, CSL was up 13%, ResMed was up 14%. So from the point of view of the Australian share market, we've delivered extraordinary performance. But against that, there is still that global concern about the virus. So we need to be conscious that it might be just a one-off run.
Sure. And what do you see as the challenges for the Australian economy going forward?
Well, the particular challenge at the moment is the slow growth environment that we have. So if we think about the consumer, for 2019, the last year, what we're seeing is falling housing construction, falling car sales, and very subdued retail spending. So from that perspective, the consumer is under pressure. Now, lower interest rates has helped support the economy, but we probably need more stimulus, either another interest rate cut or probably the government being more generous with the next budget in terms of providing more income tax cuts or more government spending to support the economy in 2020.
And what's the RBA thinking about in this environment?
Well, the Reserve Bank's quite optimistic. It says that the economy is going through a gentle turning point and is of the view that growth should start to pick up because they cut interest rates last year. We've had a lower Australian dollar, so the Australian dollar has moved down from 70 cents down to 67 cents against the American dollar. Should make us more competitive. But we're yet to see that in the actual economic activity data. So until we see that gradual turning point, we need to be a bit cautious.
Well, thank you very much for your insights, Bob.
Thank you very much, Nat.
And thank you for joining us.